connection, connection,
No, it's priced in. Nah, it's priced in.
In accordance with the laws of the state of Nevada, this court.
No, it's priced in. All right, ladies and gentlemen, if you haven't figured it out by now, today's watch list is going to be a little bit different, and I thought we should talk about the mysterious nature of things being priced in. It seems like over the last few years, no matter what happens in the market, everybody's answer is, it's already priced in. It's already priced in. So this came as a question today from Eric on stream. It was a really good question, and I think it relates to everything we have going on with how the market's moving, how the Fed futures and the bonds, even the earnings plays. We hit another 1,000%er on TSM, $60 into just under $600, and all of this is an answer of things being priced in. So it's a pretty complex topic. I thought I would touch on a lot of different things and give you some pretty easy to understand examples so that this could help you moving forward and give you some ideas and things to look at. Now, before I do any of that, we still have a market open tomorrow. We have to deal with a little bit of data. There is going to be the consumer sentiment, and that will be our only set of data there in the morning, and that has the ability to move things. But if you didn't see what happened today, the market found a way to go back up. We're still holding that 1 month range of being in the same range, but what happened that was a little bit spooky, the bond market kept going lower, yields kept going higher, the dollar kept climbing. And why? There was a couple of reasons. One, it was TSM earnings. It spurred all of the chip makers. People got excited about that in AI. That's why we hit 1,000%er on that. After hours, SMCI, they raised their guidance. That's another thing relating to being priced in. And then on top of it, that little 3-month delay in the whole government spending, they got one until March. So there's a lot that we have to digest here, but I think tomorrow should be very straightforward. It's a big option expiration, and I think afterwards we will start moving bigger. But here's the last thing I got to give you. Today and yesterday, there was a Hindenburg omen that has been triggered. If you want to search the trading fraternity, Hindenburg omen, I made videos on this in the past, the last time it's happened, and what it is saying is that 2.2% of stocks are hitting 52-week highs, while 2.2% of stocks are hitting 52-week lows, while the market is trading above its 50-day moving average, and that is usually a sign of impending volatility. A lot of people want to say it means there's going to be a crash, but what we've come to realize, it either means you are going to rocket up or you are probably going to die. It could also point to volatility to the upside. So I'm going to leave you all with that. I hope I see you on stream tomorrow, and what I need from you now, a thumbs up on the video. Make sure you're subscribed. And speaking of stream, if you don't know, baby, we are live every single day, Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning. But now, let us get into this tricky topic, man, of things being priced in. I know you have heard this, and I hope by the end of this you are able to learn a little bit. So let's start with the first key. Just because something is expected, it doesn't mean that it's priced in. Like I told you, we were on stream today, and we had Raphael Bostic, and he came on, and he said exactly what he has said in the past. And if you heard the other Fed speakers before, some of that may have not been priced in, let alone expected. There was a big market reaction, but ironically enough today, he said the same exact thing. There was a reaction, and then by the end of the day, you did bounce up. But Eric was asking, why in the world did this happen if everybody knew what he was going to say? And this is your first lesson right now. Just because something is expected, it does not mean that it is priced in and showing up on an asset, equity, option, whatever you're looking at. But now on the other hand, if you do notice that the price of something is higher or lower based on what is expected, then that is how you know it is priced in. The answer for today, how come Raphael Bostic wasn't priced in? Because this is the dilemma we have been dealing with. Although people may expect the Fed members to sound bearish, sound hawkish as of late, if you go look at the Fed futures, the price of the bonds here, and what people expect the rates to be at, those prices are still indicating something dovish, and that is where we are running into problems. That's why you could get some moves, and that's why it is very complex to price things in or not. Now, maybe this is all too confusing. I want to simplify this for you, and that's why I have two examples. Let's start with the first one. You are a 16-year-old driver. You just got your license. Even though you have never crashed a vehicle, your insurance premium will cost more. Why? Because they are pricing in the risk that you have as a driver. You haven't crashed the car ever or yet, but they are expecting a higher likelihood of an accident, and that's why they are charging you more money. Again, if the price is higher or lower based on that expectation, then it is priced in. That's a very simple example. Yes, the markets are complex, and you'll see as we get into it, but this is a very good place to build your foundation in terms of things being priced in or not. If it's not priced in and showing up on the price, even if it's expected or not, that is what you are looking for. The second example, you are a 50-year-old person. You have never missed a payment on any of your credit cards. You've had a steady job for 20 or 30 years. If you go bankrupt, that is most likely not going to be priced in, and I'm sure all of the banks leading up to it probably gave you a loan at a lower interest rate. They looked at your history and said, based on this, well, yeah, every person may not pay money back. That's why we're going to charge you interest. We're giving you our money, but they're going to charge you a lower amount. But if you go bankrupt, they were charging you so low because of your past history, they didn't expect you to do anything, and they priced that in. But the event of you going bankrupt, there's really no way you could have priced that in. That's why all the time when you hear of like a big company, you even think like FTX and that going bust, everybody thought they were really solid no matter what you thought about it. There's no way you could have priced that in because the history on it, you were like, okay, that's good. People, you may have expected it, but if you looked around, that wasn't the price of the FTP token or whatever it was until people found out what was going on, and that's why it was such a gigantic decline. So hopefully these examples can help you out now. But in terms of the stock market, where should you be looking to understand where things are priced in? There's a couple of things that we could look at. It is options, earnings, the index, and the bonds. So we already talked about the bonds. We'll get back to that one at the end. That's where all of this started from. But let's take a little bit and look at the options. I've showed you this with that tutorial at the beginning of the month. You know, we're hitting these 1,000% plays. We're going over the option chain, and we're saying, hey, if an event is supposed to happen on a company, most likely the price of that option will be higher or lower to indicate what is expected. A lot of times, the options, the market makers, they're right on the money. If they're saying, well, nothing outside of expectations are going to occur, they are pricing it to move generally like it has in the past, and they're factoring in a couple of new things. And this is what you got to look at. When I'm looking for a cheaper or more expensive option, I look at the price, because if that price is higher, and especially if the play is further out of the money and unexpected, there is a higher likelihood of a surprise being priced in. By charging a higher price, even though the expectations may be there or not, even if the reality of the event is surprising or not, by charging a higher price on the options, the market makers, the other parties who are willing to sell or buy those options, by having a higher price, they are accounting for those surprises happening. That means it is
Order
priced
submitted.
in. If you pay a higher price for an option and
Order
it moves
filled.
10-20%, but you paid 50% more for that option, it may not move a lot because that high price has priced it in. On the contrary, now, if there is a lower price on an option, you start looking at the chain even a little bit further out the money. It's not costing a lot. You've seen this. You see this a lot on the short terms. That's why people like the dailies, because people try to figure out there's a lot of certainty on a short amount of time. The prices go lower. They're like, yeah, nothing's going to happen. But if you see a lower price on a stock, it either means there's a lower likelihood of a surprise being priced in, or nothing is going to happen. But again, even if there is an expectation, if the price is lower and people aren't paying to reflect that price, there's a good chance what is happening, or what could happen, a surprise for that nature, is not being priced in. So this is the simple one. We've talked about this a lot. Again, this is the whole notion of going to the option chain. You go and see, and you'll notice even on earnings, I've showed you this one with like companies like Netflix and whatnot. You go to the option chain, you could type it in. You'll notice here there's a plus or minus. This is saying how many dollars are priced in. This is literally where implied volatility is getting some of its info from. But what we said, you go to a company on earnings, and most of the time, the contract week of earnings, the options will have a higher price because there is an event that's going on. Sometimes, if people don't expect a lot for an event, or it had already had news prior to it, the pricing could change depending on that. This is the simplest thing and a very valuable thing. If you didn't go check out the tutorial, how we turn $600 into $7,000, I posted that at the beginning of the year. That will definitely help you out with this concept and teach you a little bit about the options. But hopefully you're understanding on that one. But now let's talk a little bit about the earnings. This one is very important because I'm sure you have seen earnings come out on a company, and depending on the result, how many times have you seen it? A company may have quote-unquote beat or had a good earnings, and the stock goes down, and vice versa. We've seen companies lose billions of dollars, and the stock will rocket up. Why? It depends on what was priced in. If you're not aware, companies give guidance every quarter. Not all of them, but most of them. They give a quarterly update and they say, this is what we are expecting to do next quarter. Once people get that, they start buying and selling the company off of this. The price will change depending on what they said about the future. And then the analysts go on, and these are the guys who study the companies. You should see my other video on analysts. A lot of the time they're wrong, but unfortunately, they do affect companies and how they react. And this is where it comes down to things being priced in or not, because if analysts are expecting a company to do better than their results, than the guidance that they gave in the prior quarter, if they are expecting them to do better, the company says we're going to make $1 billion, and the analysts are saying, no, we noticed the trends and this and that, we think they're going to make $1.2 billion, then if they have a better earnings, chances are the results are priced in, and that's why sometimes ahead of the earnings, the stock will go up. These analysts upgrade it. They are saying, no, we expect them to do better. People react. They buy the stock. This stock is getting priced in for a better expectation. They expect it to happen, and then the price is going up. They are buying into that expectation. That's where something is priced in. On the contrary, this is where it gets a little confusing because sometimes the analysts will say, no, the company is going to do a lot worse, and they're saying, we don't think the company will do good. They'll start selling it off, and people will react to that expectation and sell the stock off ahead of earnings, maybe 3 months ahead of their earnings, and then the company comes out. A good example is Micron, and they're saying we have negative margins, we did very bad, and we have a lot of problems here, and then the stock will go up, and people are like, why did that happen? It's supposed to die because this idea and expectation of them doing bad by people already selling it, they have already priced that in. A bad result will not be as shocking. So where do the surprises happen? It's when the analysts are matched up with the companies. The company's like, we're going to make $1 billion, and analysts are like, okay, that sounds about right. And then they do really good, and they make $2 billion. The stock surges. A good example is Netflix as of recently. If you go see that run-up, everybody was like, no, they're not going to sign up anybody. They're only going to get 1 million members, and boom, they got 7 million members. Not one person was expecting it. The stock goes up 20%, and vice versa. When you saw a lot of these companies start to fall off of a cliff after 2021, 2022, it's because everyone was like, no, they're going to do good. They could withstand all of this, and then they would be like, yeah, nobody's buying chips anymore. I guess crypto hurt us in this area, whatever. You could fill in the blanks, but nobody was expecting it. Bad result comes out, and then the stock does drop because people were not forecasting that, whether they expected it or not. Even if some people did, if the price did not go according to that, and again, you could use the options ahead of those events to see that, those events were not priced in. So this is why, if you ever been on stream, I'll give you a basic example without needing any crazy tools. You could go to like Yahoo Finance, even NASDAQ.com, and just
Target filled. Order order filled. Order submitted. Order canceled.
First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, boys and girls, the market is going back and forth. You got a big expiration today, and you thought it was about rate cuts, but now people are talking about earnings. They are loving it. You got good guidance from SMCI. Even damn Spirit Airlines is coming out with some pre-announcements there. But in general, you are getting a back and forth. Rate cut odds have actually dropped here this morning. You had Austin Goolsby. He was not as bullish as some would have thought. But now you have this weird dynamic going on of getting ready for earnings at the same time of repricing the rate cut odds. So you got a little bit of carryover from TSM yesterday, a little bit more news now into the morning. But, Chad, we are going to have an interesting one, and I'm sure even after today, coming into next week, it's going to be what? It's priced in. It's all priced in. No, man, it's priced in. No. So, Chadadonia, I hope you're ready for all of it. Happy Friday, baby. I hope you woke up in drive. But on that note, what's up, man? Good morning. How you living? What up, Laker J? Oh, what up, like I said, Laker J. Oh, good morning. Alex Lozado, Noob, Najee Wolf, Nathan Evans, Tim Whitman, Cam Tor, Open Face Sandwich, Nate Mester, Positive Vibes, Gregory Ruiz, Carissa Hines, Noob 2K, baby, Wide Shits, Ansel, baby, Mr. Cam, Ian, Daniel, El Chapato, Christina, Yo, Remixable, Nick Soto, Javier Alexander, Me Not You, 1-0, Tyree Brown, Vince Santana, Mr. You Feel Me, baby, Right Shades in the house, ready to go, Chapper Wolf, ready to go, oh my gosh. Don't let me get too excited. I think I might lose the voice very early. Good morning, Laurie, baby. How you living? Dinosaur, Mr. Battleborn, baby. Juice Trays, ready to go, baby. Gonzalo, Mr. Brian Fierros, Mr. San Diego, Keith R, baby. Frank V, Sammy, Sean Moose, Ye Fell, baby. Bohan, Chris Flores, Rodney Gibson, Wild Style, Cambolini, Agent of Chaos, Youngblood, Chris Flores, Winning Loser, Richard Allen, Monica Ashley. Good morning. Oh, my goodness. The Bag Brigade. What up, Carlsbad Commander? How you living? What up, Alicia? What up, S-Dub for Mayor? How you doing, Jake Benstone? Caleb Invest, baby. God bless you, man. Good morning. Showing love. Oh, my goodness. Ambry, Mr. Red River Post, Jorge Perez, Ari, Jesse Garabay, baby. Good morning. Richard Judge. Oh, my goodness. Good morning, baby. Happy Friday. Donnie, do it, baby. What's up, baby, and welcome. God bless you. Oh, the Red Bull, Mr. Todd Reed, Full Cycle Farms, Daquan, Jerry Woods, J.F. Sanzo, baby. Oh, my gosh, Zigzag, baby. Josh Weber, RJ, Cole Pizza, Leaf, baby. Good morning. How y'all living? If I missed you, I didn't miss you. You know, the Chad just turned up on Friday. I hope you understand, man. Good morning. What about the Twitch? What about Miss Trader, Sim Race Review, T-Toxie, Sencal Hustle, Rippin' Snipe, baby, Big Curly, Goni, Angelo, Mavis, Avansco, Morpheus, Feed Me Seymour, Big Curly, S. Jones Jax, Ibex, Payday Devo, Blowing Dough, KJ Lemur, Mr. Belvedere, Evanescence. Is it Evanescence? Lord Wavy Bone, 333, Pinelander, KJ Lamer again, Universe's favorite, S. Jones Jax, and Robo Hand Tech, baby. Good morning. Oh, happy Friday, baby. I'm riding Save Till the Doors Fall Off. Oh, man. I feel you, though. Shout out the covered calls. But, yeah, I think there was a Boeing that had a plane fire, too, over Miami. I didn't read into it. I just saw the headline. Happy Friday, Ryan. Amen. Tell him, baby. Good morning. We blessed, baby. You got to wake up another one. You know, that's how I'm feeling, man. Let's go. We could talk about Save a little bit. Listen, man, if I'm a little hyped here, so if I get through the news, if you start hearing a bunch of voice cracks, and then we could talk about whatever y'all want. You know what I'm saying? Because Save, I'll just tell you about Save right now. You know a mother effer going to ask later today. But what they did is they said that they're pushing JetBlue to appeal the ruling. And then they gave an update early on their earnings. They said they're doing a lot better than expected. And then they said that they are looking to refinance the $1 billion that they owe. And then they said they got like more than that in liquidity right now. So Wall Street Journal hates you. That's the moral of this story, considering what they said yesterday and now the update from Spirit. So hopefully that helps, but I'm sure we're going to talk about it once again here today, baby. Law 9 months old now. Let's go. Hey, man, shout out to long term, baby. Shout out to long term. But now, let us get into the news. U.S. futures gain as chip makers are set to extend the rally. U.S. futures pointed to further gains on Wall Street Friday after a tech-led rally that pushed the NASDAQ 100 to a record high. Contracts on the NASDAQ 100 climbed about 0.7, while S&P futures were up by 0.4. Chip makers were amongst the biggest gainers. AMD climbing 2, Intel 1.2, Texas Instruments more than 2, and then after maintaining their quarterly dividend. Stock 0600 climbed about 0.1, trimming loss of this week to 1.2. The tech sector advanced further. TSM outlook fueled hopes for global recovery in chip sales. Swiss electrical equipment maker ABB dragged industrials down after saying that U.S. lawmakers are reviewing their operation in China. Treasury yields dipped along with the dollar after a frenetic repricing of policy outlook earlier this week. Investors will be paying close attention to the Federal Reserve speakers today for cues on timing and extent of rate cuts. Traders are now seeing the prospect of easing in March a little bit more than a coin toss, down from almost 80% at the end of last week. Markets have been unnerved by the reluctance of major central banks to cut rates quickly in response to slowing inflation and weak growth, said Lee Hardman, currency strategist at MUFG. It's difficult to see today's rebound in risk assets proving sustainable until central banks give the green light for rate cuts. Stocks in Asia mostly advanced as gains in semiconductors drove MSCI's Asia-Pacific gauge surge for a higher on the second day. TSMC jumped by more than 6% in Taiwan after American depository receipts jumped almost 10, close to their highest since February 2022. Fed Bank Atlanta Bostic urged policymakers to proceed cautiously given the potential impacts of unpredictable events from the election to global conflicts. His Philadelphia counterpart Patrick Harker said he expects inflation to keep ebbing towards the target. Chicago Fed President Goolsbee and the San Francisco Fed are scheduled to speak today. BlackRock expects the Fed to start cutting rates in June, senior investing strategist Laura Cooper said in an interview. We now see 75 to 100 basis points of reductions by year end. We're leaning more towards a June rate cut and then a recalibration, said Cooper. Markets have been very exuberant in their bets on policy. She said, adding there is a degree of repricing that still needs to come through. That adds to our view that's going to be a bit of volatility ahead. On the U.S. outlook, Bank of America strategist said that the stocks that led the rally in 23 are again the traders' top picks amid elevated treasury yields. Magnificent Seven investors are reverting to owning growth technology, the AI bubble, and the so-called Magnificent Seven of stocks, including Apple, as the 10-year settles in a range of 375 to 425. Bank of America team led by Michael Hartnett wrote in a note, same group of equities led by the NASDAQ 100's 54% rally last year amid expectations of rate cuts, a solid economy, and optimism of AI development. So far, January, NVIDIA, Microsoft, Meta, all among those 7 dominant stocks are the top gainers of the tech-heavy index. Elsewhere, oil was steady after closing at a 3-week high on escalating tensions in the Middle East. Gold headed for a weekly loss on the recalibration of Fed cuts. You got Canada retail sales today, existing home sales, and Michigan consumer sentiment. ECB President Lagarde and IMF Managing Director Georgieva speak in Davos on Friday, and then San Francisco Fed President Mary Daly. That's it. That's all you have, Habibi. That's all you have. A tech rally. A rally in big tech stocks has helped the NASDAQ 100 close to a record high, and futures are pointing those gains extending on Friday. A brighter outlook for TSM helped the mood and lift hopes for a broader recovery in tech sector in 2024. Semiconductor names like NVIDIA and Broadcom were among those benefiting from the fuel of the NASDAQ rally, along with the best day for Apple shares since May yesterday. Tech earnings season kicks into gear next week with Netflix, Texas Instruments, and Intel among those set to report. Apple launch. Apple shares were helped by a rating upgrade from Bank of America, driven by optimism about AI and better iPhone upgrade cycle to come. The broker was also positive on the launch of the Vision Pro reality headset pre-order, which starts on Friday to provide the first taste of consumer demand for a $3,500 device. The handset won't include apps for YouTube and Spotify, however, the world's most popular video and music services. Netflix, too, has already said it won't launch a specific app. Inversion normalization. Bond traders are increasingly convinced that the inversion in the U.S. Treasury yields is headed towards normalizing, though how and why this happens will mean volatility to come. The question being asked is whether yields will sink on the short end as the rate cuts emerge, or whether the 10-year yield will rise more for higher for longer scenario. The Federal Reserve continues to push back against current rate wagers for rate cuts, with Raphael Bostic the latest to urge caution given global uncertainty. Fed Goolsbee and Mary Daly are speaking today. Bank measures. U.S. regulators are preparing to launch a plan that would require banks to tap their discount window at least once a year in order to reduce the stigma of doing so and ensure that lenders are ready for a downturn. It's the latest response to a regional banking crisis last year, which highlighted that some lenders were not operationally set up to quickly borrow from the window in a pinch. Separately, banks have borrowed a record amount from the Fed's Bank Term Funding Program into the week of Wednesday, a tool that allows banks and credit unions credit unions to borrow funds for up to 1 year. China sell-off. The largest brokerage in China is said to have suspended short selling for some of their clients in mainland markets following the rout in China stocks at the start of the year. State-owned CITIC Securities made the move after so-called window guidance from regulators. A Hong Kong gauge of Chinese stocks have notched up to its worst week since March, while global passive funds are adding to the pressure by joining the sell-off. And this is all wreaking havoc in the country's asset management sector, with mutual funds closing hitting a 5-year high and another sign of deteriorating investor confidence. My goodness. S&P futures are up by 0.5 Monday morning, comes after U.S. equities finished higher on Thursday with upside leadership from big tech and semis, while managed care, credit cards, banks underperform. Stocks on track for a mixed week with some index-level cushion from tech outperformance. Treasury slightly weaker with yields meaningfully higher for the week. Dollar index down by 0.2, gold up by 0.5, Bitcoin up by 1.2, and crude is off by 0.2. A big story this week has been continued repricing of 24 rate cut expectation. March odds are now slightly above 50%, with the market pricing in 140 basis points of easing this year, down from a peak of 175. Repricing a function of central bank pushback and firmer data. Renewed push into big tech growth, particularly AI beneficiaries. One of the most notable developments as of late. Concentration dynamics a positive at the index level, though some scrutiny on the underperformance and renewed shorting of lower quality baskets in select cyclicals, including the banks. Preliminary University Michigan consumer sentiment and Michigan 5 to 10 year inflation expectations on the U.S. economic calendar, along with existing home sales for December. Fed Goolsbee highlighted the importance of real restrictiveness and noted that inflation will dictate the rate push. Pretty quiet outside of that continued flurry of central bank repricing headlines. Congress passed the stopgap funding bill. Government to early March. Some of the focus on upcoming battle of tech earnings and importance of market sentiment. U.S. equities saw second straight week of outflows, with money markets saw $6.8 billion of outflows after a record $163 of inflows over the first 2 weeks. JB Hunt, EBIT largely in line with street positive on intermodal margin and profitability upside, improved volume growth. PPG profitability a bit better with some focus on raw material deflation, while largely in line with 24 guidance. SMCI guided December quarter revenue well ahead of their prior outlook, citing strong market and end of customer demand for rack sale, AI and total IT solutions. STT helped by positive fee guidance. CMA NII guide worse than expected. Honeywell or Hun out with negative pre-announcement. Save has caught a big bounce. Q4 revenue guide outside of earnings. iRobot down big on reports. EU regulators plan to block the deal of acquisition by Amazon. Wayfair up big on layoff restructuring announcement. Macy's reportedly reducing retail footprint and cutting 3.5% of headcount. Wendy's named new CEO, and EDR reportedly set to go private. My, oh my. Atlanta Fed President Bostic reiterates view on proceeding cautiously with rate cuts. U.S. banks would be forced to tap Fed discount window at least once a year under new plan. Economists say 4 ECB rate reductions in 24, 3 in 25, and consider forward guidance return. RBI won't consider rate cuts until inflation firmly below 4. Mortgage rates in the U.S. fall to the lowest since May after 2 weeks of increase. Red Sea crisis pressures China exporters, shipping delays and costs melt. Japan core inflation eases in line. Expectations on BFJ seen on hold next week. UK retail sales fell at the fastest pace the nation was in COVID lockdown 3 years ago. UK finance minister signals he wants more tax cuts before election. Open possibility of 2 more budgets. Macy plans to cut headcount. EU antitrust regulators intend to block Amazon's proposed acquisition of iRobot. Michael Burke appointed as LVMH's new chairman and CEO. Spirit Airlines to consider restructuring options and JetBlue acquisition denial. Amazon announces more layoffs, this time the buy with Prime segment. CVC Capital Partners opts for finance 2 of the latest buyouts with loans from investment banks. TSMC earnings strengthen confidence in semiconductor rebound, lifting other chip stocks. Several business development companies go public, first notable offering in 2 years. Passive investment and funds surpass active total assets at the end of 2023. Congress passes stopgap funding bill, governments for early March. China's biggest brokerage suspends short sales following sell-off. Chinese mutual funds close at 5-year high amid weakening investor confidence. China tells heavily indebted local governments to delay or halt debt-funded infrastructure projects. China aging population threatens goal of transition to new economic growth model. U.S. officials accept airstrikes may not deter Houthis Houthis from further attacks on ships. Israel PM Netanyahu rejects calls for establishment of Palestinian state. NATO to conduct biggest war drill since COVID war with 90,000 troops. And diplomats from the U.S. and China urge Pakistan and Iran to show restraint after the latest skirmish. Only we could bomb people. Calm down. Ba-da-bop-bop-bop. So, Chatadonia, there was your power run on the news. I hope you're ready again. If you don't know, today is the battle between rate cut odds and earnings expectations. Earnings optimism and rate cut odds. That's what you got, baby. And it's Friday and a big expiration. And then more earnings next week. And then the week after that, more earnings and then Powell. My goodness. Don't worry. Be happy. Alrighty. Got a couple of plays still. SMCI, they're up 11%, preliminary quarter two earnings. All the other chip makers are up, and then even following after TSM. Travelers is up by 5.3. We should take a look at those options. They had earnings. They're a little bit up more than expected. EDR, 5.3. Silver Lake, reportedly planning to divest parts of Endeavor after taking it private. STT up 5.2. Off of earnings. JB Hunt 3.6 off of earnings. IBM Evercore upgrade up 2.2. Roku 2.2. Seaport Research Partner upgrade. IBN up 2.1. PayPal 2.0. Path 1.9. SYM 1.8. AT&T 1.7. Oppenheimer upgrade. Mobileye up 1.6. DraftKings 1.6. Stifle upgrade. BNB Paragraphs Exane downgrade. Zoom up 1.5. Broadcom 1.5. Goldman Sachs reinstates buy. SLB 1.2, FitB 0.4 off of earnings, Wayfair up 15.2, Workforce Realignment Plan, SHLS up 4.0, Janie Montgomery Scott initiates buy, MNSO up 3.6, CDLR up 2.9, Ally up 2.7 off of earnings, KAMN 99% to be acquired by Arcline for $46 a share, Mesa up 67.2, new agreement with United Airlines, Save up 34.6, reportedly pushing JetBlue to appeal ruling blocking merger, preliminary quarter 4 in liquidity and refinancing update. BGXX up 14.3, FPH 12.1 off of earnings, MODD 11.2, 510K submission of Mod 1 insulin pump, Bird up 9.1, Silk up 7.7, Stifle upgrade, Coherus up 5.8, phase 2 clinical data on Casdozokitug. I don't know what that one is. Fiverr 5.6, Goldman Sachs upgrade, GOL up 4.2, PRQR up 3.8, new data from presentation of Aximal RNA editing, BDSB up 3.5, Eric down 3.6, Barclay downgrade, NOK down 2.6, Barclay downgrade, CELH down 2.5, Bank of America downgrade, PPG down 1.7 off of earnings, CMI 1.7 down off of Bank of America downgrade, UBS down 1.4, Autonomous Research downgrade, Moore down 11.9, Chegg down 8.9, Goldman Sachs downgrade, Core a 6.3 down, Goldman downgrade, Duolingo down 4.4, Goldman Sachs downgrade, Hertz down 3.2, Jeffrey downgrade, CMA down 2.5 off of earnings, NTCO down 2.1, Honeywell down 2.1 off of guidance, iRobot down 34%, European Commission plans to block Amazon bid to acquire iRobot, Fund down 27.7, ASTS down 21.2, 32 million share proffering priced at $3.10, ESPR down 19.8, 56 million share pricing at $1.50. AXDX down 17.1. CCTG down 13. Hover down 11.4. RTC down 7.6. BTM down 4.2. DEC 4.2. ARQT down 4.0. AMSC down 3.8. LUXH down 3.1. ABSI down 3.0. Matterport down by 2.7. BTIG initiates neutral. And then Chinese ADRs are all trading slightly lower. Not bad. Not bad, no. Did you say bad? Maybe, kind of, a little bit. A little bit. What time is it? So I got a couple of plays. I'm going to be watching TSM. We are still in the money on those. That should be a little bit of fun. SMCI and Broadcom. Again, SMCI I think is moving a little bit more. They have the guidance. Watch all the chips in general. Again, PayPal, that's been having nice continuation. I don't know if we're actually going to finally get an earnings upgrade, but we haven't yet. And then keep an eye on gold and then the airlines with the whole save thing and then just the general market and see if we get above what was priced in this morning or from last night. So that's all I'm going to be looking at. We still got a lot of good time here. So on that note, I'm going to go to the bathroom. I hope you digest some of the plays here. And when I return, I hope you're locked and loaded, baby. Happy Friday, baby. Let's see what happens.
Of those. Alternatively,
I will BRB.
if the House changes control, or the White House changes control, we will likely have a making permanent of the 2017, 2018 tax cuts. Both programs are likely going to be deficit sustaining as opposed to debt reducing.
Yeah.
And so we try to talk to folks about, look, right now, those are the only policies really that people can identify in terms of the differences, but the outcome's the same, which is both put upward pressure on interest rates.
Right. Yeah, exactly. So, Zach, is that kind of how you talk to clients too? Like the big takeaway, no matter who wins, no matter what happens, no matter what geopolitics works out to be, is that we're going to spend more money.
Well, that's kind of where I was going to go, Alex. In terms of the most underappreciated risk by the market, we think right now it's the possibility of higher rates again. I feel like it was a pretty brief trip to 5% on the 10-year, maybe more narrative driven around the supply concerns that we have for this year. But those supply concerns, at least from a logistical perspective, that supply hasn't hit the market yet. And so that's something that we're concerned about. And I think all of these political issues, political headlines that we can expect just kind of highlight that dysfunction and brings back kind of the Fitch ratings downgrade that brought into question the U.S. government's credit rating. And so I think that's one thing that we are talking to clients about now, and a way to position that as potentially duration hedges, especially if the Fed market pricing is way overdone, kind of the way we think it is at this stage.
Did you anticipate, Zach, that you were going to see upward pressure on long-term rates, and also the Fed's going to have to be more active, maybe with hikes or at least not cuts, to manage any kind of deficit spending and inflationary impact?
I'd say we're concerned about the supply side of the story from a Treasury issuance perspective, and that's something that we're focused on. But when we think about what's going to overwhelm that, at least in terms of the shape of the curve and where rates go in 2024, it's going to be the monetary policy shift. And if you go back and look at Treasury supply concerns in the past, it's been more so the driver of yields.
Today's option expiry is $3.4 trillion. My goodness. So on that note, Chattadonia, I hope you're ready to go. Again, why is the name Scam? I thought it was funny because we were talking about yesterday, the spy scam. And then again, you're going to get a lot of back and forth today on expiration date. Again, the rate cut odds are still pushing back. Why do you have optimism? Why is the NASDAQ near all-time high? Mother effers are getting hyped on earnings. So again, from SMCI to TSM, people are feeling good about chips. You're getting your early optimism. Scam like Ohio. Scam like Ohio. On that note, Chattadonia, I hope you're ready for all of it. You got to hear a little bit on TV and the news, but tell me, my friend, what do you got? What do you got, baby? What is your first play of the day? Post it in the Oh, we got the peach as the first one. Oh, Arna. Oh, my goodness. Oh, my goodness. Oh, my goodness. It's there, baby. God bless you. So we're starting with the peach. Tesla puts, SPY puts, GDX, baby, peach, CRM calls, Peach Nation, SPY calls, NVIDIA calls, AMD, bag holding Tesla apparently, calls on iRobot, Lawn TQQ, ARM calls, Google, March, NVIDIA, Tesla puts and calls, Walgreen put, SPY 1647 put under 250, Bitcoin Lawn, Baba shares, GLD, Original Peach, Broadcom, JD shares, Boeing, NVIDIA, AMD, LOL, PayPal calls, USO calls, Josh calls, SMCI, Peach, YM, Peaches go, Meta puts, Kroger, SPX calls, Save calls, Apple calls, Josh calls on the Philo, Link, SLB, Metacalls, Oil, HD, puts, selling TRV call, NVIDIA calls to the moon, PayPal calls, Yin, Safe calls, Tesla, TSM, Ally, Peach me had a Dougie, NDX puts, Save me calls, Credit spread, Save calls, HD, Tesla, GM, Roku calls, KRE calls, today's options expiry, close on NVIDIA, QQQ, Meta to buy millions, billions of NVIDIA, Riot, Tesla's, SMCI, Careful puts, Holding DFS puts, Cart spread, Spy calls, Netflix calls, Habibi, Wayfair calls, long term every day, Ryan calls, Wayfair calls, close Roblox, Royal Rumble into next week, short gold, iRobot in the final plays. Not chasing Jason, CVS puts, SMCI calls, HD, and Apple flips, baby. Let's go. Wow. Wow, Chattadonia. But on that note, ladies and gentlemen, boys and girls, it's more important than the plays. And every day, before we chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will. And I am talking about the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even their families, baby. Shout out to the veterans. Thank you for doing what you do. I hope all of you always show this love and appreciation. If you do nothing at all, I hope you do this, man. They made the ultimate sacrifice. They are honoring the nation. They listen, even if they listen to rulings and orders, even if they agreed or not, for your freedom, baby. So, vets, thank you all. God bless every single one of you. And I hope you all know you are loved and appreciated, baby. So thank you. And big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches. You helping your community run, baby. That is literally what it is all about. So thank you, baby. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send it to Jets! Oh, no, let's go. Oh, Chattadonia. Nah, man. I already got a long term. Won't you be my long term portfolio? Okay. Let's go, baby. Chattadonia, happy Friday. That's it. Your third Friday of the year, leading into your fourth week of the year. Oh, my goodness. So we already got the plays. I hope you guys are all ready for that. You know what I'm saying? I hope you are all ready for that. And I think that's all we got to deal with. I think we're going to have to see, man. That's it. We already got the plays down. We got a couple to look at. Again, I'd be watching the chips all the way down to PayPal. We'll see what those airlines end up doing as well. And that's it. That's all we got to see. How do I do this? All right, man. You got 30 seconds. Like the video. Make sure you guys are subscribed. Call any plays out. You have any questions, you let me know. Anything else, man, we could talk about it all day, bro. We could talk. We'll see how it all badge. Yeah, you got Alexis in the Twitch, man. Twitch got some different badges. They're a little different. You got Harley's to Lexus to Powell. You remember somebody got mad because they had a Jordan Peterson? They're like, why do I have this guy? I'm like, damn, I didn't. I apologize. 3 seconds. 2, 1. Round
Order
one.
filled.
Fight. Now, that'd be crazy if all of the fights were announced with a voice crack. That'd be nuts, man. So good morning. You're up by about 0.3 all across the board. I think NASDAQ 0.4. Surprisingly, the Russell is taking over today. We will see how long that lasts.
Target filled.
Your TSM plays are now at 1,000%. What was it? Didn't DFS flush or no? Did they come back up? Oh, BS. Once again. But I'm still in those again. We still have a week on that. So hopefully that one could come back. But they've been killing that premium left and right. We will see again. SMCI, that was the crazy one. I do like Broadcom. Again, PayPal. The question is going to be, are we going to last after the first 30-minute, 1-hour pump? That's what we got to watch out for. Why is this up here? WebEx? The government watching me. Damn, 4799? My goodness. So NASDAQ's already at record highs, but you guys realize your last high was like 4802. So I don't know. Maybe we hit all-time highs today. That's crazy. Pfizer down, ANET 52-week high, Save coming down. There's Discover. We keep TSM's even in the negative, believe it or not. Let's see what we're working with here. I'm looking at an option.